Hi, welcome to our channel, Excellent Trading Experience YouTube channel. As discussed earlier, in the last video, we have discussed about the ways through which one can earn from stock markets. In that previous video, I have discussed about the ways in which one can earn money through stock markets. And while discussing the same, we discussed that there are two ways to earn from stock markets. That is, one is investing and second one is trading. And we have further divided the trading into two subparts. That is, one is intraday and another one is futures and options. F&O. Okay, and under that, while explaining about the investing, we have taken the example of ITC. And while taking intraday also, we have taken the ITC examples only in order to understand it better manner. Okay, and next, in that example, we have purchased 100 units of the ITC share at 450 and sold the same at 100 units of ITC at 500 rupees. Hence, we have earned a 50 rupees profit per share. Okay, and while understanding about the trading also, we have given the introductory matters about the intraday and we have discussed about F&O too. Actually, and under the previous video, we have learnt some things only about the futures and options. Today, we are going to learn about exclusively about the futures and options. Okay, under the futures and options, one has to know that futures and options. Futures are separate thing where the buyer and seller has the obligation. Before that, we need to learn about a simple example of a practical scenario in order to understand futures and options in a better manner. Okay, and first I am telling about the example. Please note down. There is a buyer and there is a seller, and buyer has wanted to buy a piece of land, that is a land located at a particular location, and the buyer thought that in a upcoming 6 months there may be a possibility that a ring road sanction will be there besides the land, and the buyer thought that in order to get the benefit of the future market price increase after the 6 months, and there is a two possibilities is there. After 6 months, ring road may get sanctioned and the market price of the land will go and he will earn a profit around it. Per se, there is a 80% chances to ring road sanction, and the buyer and the seller has entered a contract saying that the buyer will pay 5 lakh rupees as a token amount to the seller for that seller has to promise that and has an obligation that to sell a particular land without checking with the market price. He needs to sell the piece of land at 1 crore rupees, and after the 6 months passes, that means after the 6 months, that is after 6 months elapses, the ring road may sanction or may not sanction. If the as per the buyer expectation, if ring road sanctions, what will be the thing, and if ring roads not sanction, what will be the scenario we need to learn now. Okay, and if under the contract there is a clause that if land is not purchased by the buyer, the token amount deposited by him will be forfeited by the seller and no penny will be paid to the buyer. Next, if after 6 months the buyer checking with the present scenario, there is ring road possibility is there, ring road sanction, and the value of the property will goes to 2 crore rupees, and there may be a possibility that the ring road may not be sanctioned. In that case, the market price of the land goes down to 60 lakhs. Since the buyer has the right to buy the property at 1 crore, if ring road sanctioned, the market price of the land has increased to 2 crores. Hence, the buyer will buy the land from the seller at a cost of 1 crore rupees and sold it at the market participants at the price of 2 crore rupees. Hence, there is a profit of 1 crore rupees. Okay, 2 crores buying price, 1 crore buy price and 2 crores sell price. He will getting 1 crore rupees as a profit in case the ring road is sanctioned as per his expectation. And there is another probability is there, ring road may not be sanctioned and the property of the land value goes down to 60 lakhs. In that case, he is having the right only, hence he may exercise, may not be exercised. As a prudent buyer, he should not exercise the contract. Why? Because if he exercises, he will lose 40 lakhs, whereas if he does not exercises, he will lose a maximum of token deposit amount of 5 lakhs only. Hence, since he has the right, so he need not execute the contract. In order to save from him from 40 lakhs loss, he has to forgo 5 lakh rupees of token deposit. That's the basic idea and the basic example in order to understand the futures and options in a better manner. Okay, and now we are learning based upon this example, we are going to learn about the futures and options. So let's see what happened, why this example will be correlated with the futures and options. We need to understand in a better manner. So before going that, we need to erase all these matters and we will discuss about the futures and options in a fresh manner. Okay, right. We are going to erase the things. If you have any doubts or if you wanted to copy down the any important points, please note it out, so that in further videos I will take the example of this and will discuss about this and what about this 5 lakhs, what is a contract between the buyer and seller, and there is a possibility of a ring road sanction and a ring road not sanctioned. Based upon these facts, we will be discussing about the futures and options too, and as we discussed, if ring road sanctioned, what is the market price will be there and how much is the profit. If ring road not sanctioned, how the market price of the land will goes down and what will be the action, like that we need to discuss. One has to understand that here buyer has the right and seller has the obligation. If seller knows about the market price of the land has goes down because of the reason of the ring road to the 2 crores, even though he has the obligation to sell the land to the buyer at a cost of 1 crore rupees only. That is the main thing you need to remember about this example, and we will go through that and we will discuss about the futures and options now. Okay, we'll go. Now we are understanding about the futures and options. Here futures is separate thing and options are separate thing. Under the futures, buyer and seller both have the obligation, whereas under the both have obligation here, whereas under the options buyer has the right and seller has the obligation. Okay. Next we are going to learn about this thing and this thing. Now we are now exclusively discuss about the futures now, and after that we will discuss about the options. Under the futures, for say we can take it as example of Nifty. Presently the current market price of the Nifty is 18,500. Okay, and we thought that the market price will goes up to the 18,600, and we will say that the present future price of the Nifty is say around 18,580 rupees, and as the buyer has estimated that the market price of the Nifty will goes up to the 18,600. In that case the futures price may move to the same amount or some different amount. Let's say the future price will goes up to the 18,660 or 18,700 based upon the confidence and based upon the market conditions. And so one has to understood that if current market prices changes, that is called as a spot price changes with 100 points, there is no conformity, there is no guarantee to say that the future price is also move at this with the same amount of increase. It's depending upon the confidence of the market participants and market forces. Okay, like this the futures will be determined and the future prices are traded. And one has to understood that futures have 3 months, maximum 3 months contracts. Let's say if the current month is going is June month, and hence 3 months means June, July and August. So 3 months will be there. If June month completes and September month contracts gate will be opened, like that the futures will be going on. Last Thursday, generally the expiry day is last Thursday of the month. For say if in the case of the June contracts, the expiry date is last Thursday of June month. Okay, hope you understand the things properly, and if you have any doubts feel free to comment below. I am happy to help you out. And some important points to be remembered about the futures is both the buyers and sellers have the obligation, and buyer will buy the futures only if the spot price of the market will goes up, and the one has to think about that there is no strike prices involved in it, and if market on the expiry date the both futures price and the spot price will matches. Now we are going about the discussion, we are going to learn about the futures options. And the options we can simply correlate with our example of land, where where you can correlate with buyer as a land buyer and seller as a land seller, and there is a contact between them. Like that we need to discuss, and the same thing will be happened in the options too. And since the board is not the space is not available to discuss the more, we need to erase the things. So if you have any doubts or if you wanted to note down the anything, please note down, and we will erase this thing, and we'll discuss the options in a detailed manner now. Okay, hope you understand. I am hoping that all our explanation is going to good things about your trading journey. Okay, let's delete and we'll discuss the things about the options. Under the options we can say that there is a contract between the buyer and seller, and buyer has a right and the seller has the obligation, as we discussed. And Under the options, there is a concepts called strike prices and spot price. Generally, the strike price of the Nifty will be, if current market price of the Nifty is 18,500. Before that, we need to learn about the one thing, that is options are divided into two parts, and presently the Nifty lot size is 50, and the options are divided into two types. One is call option, and another one is put option. What is meant by call option, what is meant by put option, we need to learn about this thing now. Call means it indicates that the market price will goes up. Buyer will buy the call option only if he thought that the current market price of the underlying, that is in our example Nifty will go up, then one has to buy the call option. That indicates a up move. And in the case of the put option, put indicates a down move in the market. That means one has to buy the put option if he thought that the market price of the Nifty or any underlying will go down. Okay, that is a basic understanding about the call option and put option. And we will learn about the what are the strike prices in the case of our example of Nifty. Nifty current market price is 18,500. Hence, the call options, that is indicated with the CE, and put options, that is indicated with the PE. And we learn about the strike prices available in the market. If 18,500 is there, for every 50 points, 18,500 call option, and plus 50 points, 18,550 call option, that is indicated by the CE, and 18,600 call option, and 18,650 call option, and so on. Okay, like this thing will be available in the case of the put options too. Put options indicates the down move, hence the put options will have 18,500 PE, that indicated with the put option, and 18,450 PE, 18,400 PE, and so on and so forth. So that the basically you understood that under the futures and under the options there is a strike prices, and what is the market presently trading is called the spot prices. And in the options too, the option prices will merge with the current market price, spot prices, and the expiry. Okay, hope current market price is less than spot closer. If that means if current market price closer to the strike price, then the option prices of those options will be at a higher level, higher value. And whereas in case current market price is far away with the spot price we have selected, then the option price of that will be a lower value compared to the nearest one. One has to understood this in order to go further. Okay. Next, basic, this is all about the basic understanding of futures and options. In order to cope up with, in order to link with the practical scenarios, one needs to have the trading and demat account. You definitely required it in order to grow in your trading career. So I will provide our links for opening a free demat and trading account of FIRES, Upstocks, and Elise Blue. Please go and click on the links and open your free demat account today. And in future videos we will discuss about each one of the platform, and we will explain about the types of the orders, and so many things we are planning. So please stay tuned to our channel, and please like, share, and subscribe to our channel, and we will all strive for the benefit of the viewers. And some of the persons thinking that the South Indians are lacking the knowledge about the stock markets. So in order to cope up with the North Indians, one has to be more focus on about the South Indians knowledge on the stock markets. So I have started this channel to encourage and to share the knowledge about the stock markets to the mainly South Indians. Why? Because I am a South Indian person and I strive for the growth of the South Indians, and I am not discriminating anyone. Both North Indians and South Indians are firstly Indians, then only the bifurcation will come. So don't underestimate the South Indians, and don't overestimate the North Indians, and all are equal, and we will definitely prove in our upcoming videos. Please stay tuned to our channel. Definitely you will be learned a magical understanding about the stock markets, and you will definitely um, appreciated once this all videos will be listened. So please follow and stay tuned to our channel for future updates, and feel free to ask your doubts in the comment section, and we will be closing our section 1 or 2 minute span. Before that, once again saying that the main focus will be on the South Indians, but there is no discrimination on about the things in the people. So please hope you understand the situation, and we will definitely increase the knowledge of the South Indians on the stock markets. So ultimately the main purpose of these videos is to share the knowledge what I have about the stock markets, and in order to encourage the people in the more efficient manner. So don't think that this is like gambling like that. There are so many debates in the market saying that some will say this is a business and some will say this is not a business, this is a gambling like that. So don't undergo with those arguments. First you know about this thing, after that you will decide whether doing or not is your decision is in your hand. But knowing about this thing is the basic thing you need to do in order to take a decision. First of all, you need to you need to understand the things. After that, you take the decision. That is the secondary part. First you do your first part, and based upon that, you will decide the second part. That's all about this video. Hope this video is helpful to you all. Please once again like, share, and subscribe to our channel. Thanks for watching once again. Bye bye. We are closing our session today. Bye.